Hello, everyone. Mark here at Tesla, and unfortunately, Tesla had a bad day today. Market wasn't great overall, but Tesla definitely underperformed compared to the index. But I guess in line with EV names like Rivian and such. The closing price was $242.19, and that's a $7.51 drop from yesterday and just over a 3% decline in price. So we kind of had some scenarios that we drew up, and we figured that if it was going to be bullish, it would be a gap up, a slight buy into the morning, and flat for the rest of the day, and some type of movement at the end of the day. If it was going to be pretty bearish, we had two scenarios, which would be the dark purple line, which we talked about, which would be a complete sell-off in the morning, which it definitely did. It sold off, and kind of you can see how it tried to base itself. It tried to base itself a little bit lower. It actually made a new low, which was 242, which beat the low of 242.77 a couple days ago, unfortunately. And these are bearish signs, completely bearish. And it tried to do the rally, which we thought it would do. So if you follow that purple line, we thought it would rally, then stay flat for the rest of the day. But unfortunately, it rallied a little bit and then sold off immediately, more so targeting the light purple line, which we talked about, which was if it was a sell all day scenario, that's what it would look like. It would just be like a diagonal line down. We're not too far off from that. This purple line assumes that we're going to have a CPI de-risk during the futures market. So into the late night to, well, basically maybe early morning Eastern time. I wouldn't be surprised if you see further de-risking in the futures market, and you can probably just check pricing on that through Robinhood's 24-hour trading thing. And you can keep track of all the big stocks and see how they're kind of moving in these 24-hour trade after hours type of situations. So if it dips even further before CPI is released, so CPI is going to be released around, I think that's 8:30 tomorrow, and pre-market trading will open at 7 a.m. Eastern time. So you might see a further de-risk to go ahead and touch the bottom of this channel, which what we assume is like mostly a bear flag of some sort. But this channel it's been basically testing this diagonal trend line over and over again. It's going to test it again probably before CPI is released. If there's some bullishness, that's fine. I mean, it really doesn't matter how the setup is tomorrow, but because we can't really trade it. But it is going to be completely dependent on the CPI print. And before we further dive into the chart, let's go ahead and take a look at some of the CPI news. And it's the only thing that really matters right now. It's the only thing that's going to save Tesla from the gap fill below. So here is Gergavin's compilation of the analyst estimates for headline CPI tomorrow. So this is the headline CPI, and firstly the median's around 3.3, and we talked about that being the expected inflation reading year over year, and most people are in that area of 3.2 to 3.3. JP Morgan is excessively pessimistic about inflation. They can be completely right. We have a lot of unknowns about how energy is factoring into the headline inflation number, but everyone's around 3.3. And the reason I wanted to show this to you is because if you're able to trade the futures, if you're able to trade during the release of CPI, just understand that when you see the numbers come out, kind of compare it in your mind, that understand that 3.1 is the most optimistic, 3.4 is the most pessimistic. If you see a number that's pretty low, like 3%, 3.1%, it's probably going to be a good day for the market. Doesn't mean necessarily Tesla is going to perform very well. We'll talk about how the price action works on CPI later on in this video. So just figure 3 to 3.1 would be awesome. 3.4 or higher would be pretty terrible. Here is the economic calendar for tomorrow again. So we still have initial jobless claims. Then we have the CPI stuff. So core 4.7 is the expected. 3.3 is headline CPI. year over year, and 0.2% for both month over month. So headline is kind of baked in that it's going to be higher than previous. It's also core is also meant to maybe beat last year by 0.1. But like I mentioned, we need to see like a 4.5 to have any bullishness in the market tomorrow. There needs to be a solid miss on these. Otherwise, the market won't be all that ecstatic and will continue to sell off. Any pops, any rips will be sold. So that's kind of your cue. If you see really, really bullish action and it completely sells off by the open, or if it stays flat until the open and starts selling, you can probably assume that they're trying to sell that rip and get out of the market with another better price for whatever they're selling. That's all people are doing. You're trying to get a good price. Any rip is sold. And you kind of saw that even today. So here's a probability on the month over month CPI results. So JP Morgan comes out with these basically these odds, these probabilities of how the market would react depending on the month over month actual CPI. So if CPI raises by the consensus of 0.2, then there's a 45% probability that this happens, by the way. Maybe the S&P 500 will add 1/4 to 0.5%. Nothing really spectacular, just because it might add this just because it's been selling off for many, many days in a row. But it wouldn't be really a convincing print to be further bullish on the market. There's a 25% probability that CPI increases by 0.1 to 0.2% month over month. SPY will go 1% to 1.5%. This would be pretty good. Hopefully that will translate to a headline of like 3.1, a core 4.5, 4.6 year over year. So 22.5% probability that CPI is actually higher than consensus, 0.2 to 0.4%. And then the SPY will shed 1% to 1.5%. And here's some small probabilities, 5% that CPI is over 0.4%, which would be tragic and disastrous. And they say the market could fall up to 2%, which I fully believe that can be very, very possible. It would be kind of difficult to imagine where Tesla would be if the SPY falls 2% in one day. Maybe Tesla would be down 8%. 2.5% probability that CPI comes in below 0.1% month over month, and the S&P 500 will climb 1.5 to 2%. So you can kind of try to keep these in mind. We've seen good CPI results be sold off immediately and not have the real reaction until the next day. I just want to let you guys know about that. And before we get back to the charts, let's look at how the options open interest and volume is shaping up for Tesla going into Thursday. So later on in the week, we're seeing a floor being put in, hopefully at 240. I'm not really too convinced. We've seen Tesla fall through these quote unquote put floors pretty easily, and then the market adjusts by buying more in the money puts or puts right below whatever Tesla closes at tomorrow. People are really, really bullish still. There is a lot of calls to puts with a put call ratio at 0.76, which is skewing heavily towards the calls. People like the 250. For me, kind of what I'm looking at the moment, max pain looks to be around 243. Currently the stock price is what, 242? So 243 is what max pain looks like for the week. This will definitely evolve based off the news tomorrow. And so that's the CPI stuff. Let's go ahead, look back at the charts and look at Tesla today. So let's go to the minute. I think we can clear off all the drawings for now. They're not really that important anymore. Just clean it up. So the open was here, and open had a very slight gap up, and it was at 250 and 88, 250, 88, and it just sold off completely towards, let's see, 11 a.m. Eastern time. It fell 3.5%. Not great. The close, so, well, okay, firstly, it did rally a little bit. First, it rallied 1.2%. Then eventually, by the afternoon, it was up 1.8% from the low of the day. But it sold off the rest of the day and actually made a new low at 241. That's not great. 241.90 got bought back a little bit and closed for a loss of 1.78% towards the end of the day. This is not really a great looking chart. Like you could say on this kind of like smaller time frame, if we were to draw something out, you can see this is a kind of inverted cup and handle, where if this was to play out, and it's basically a pattern that shows a low was created, a little bit of buying was done to relieve all that selling, and there wasn't really a want and desire by the market to create a new high. It never took out these highs. It made this high, made a lower high, made an equal high, lower high, slightly higher high, but now that higher high forms this kind of upside down cup, and you're seeing a level. It's just slightly at an angle, but you're seeing a level that is being tested over and over again, and that's not a great look because, yeah, there's nothing really bullish about this current pattern, and it just really sets up for a drop. Because if you were to turn this pattern upside down, and I don't have there's no good example recently, obviously, but if you were to see that Tesla was pushing up against a level, a price, then I bet you would feel pretty bullish about it. Like if this was upside down and it was pushing up against, I don't know, 300, and you saw 3 attempts at 300, you would say like it's gonna break one way or the other, but you're probably thinking it's gonna break up because it's making, if this was inverted, it would be making lower lows, right? You'd be making lower lows the entire time. And unfortunately, in this kind of inverted setup, this is going to be lower highs all day long. Lower highs. Let's zoom out a little bit. We can see these lower highs. Since we removed the drawings, let's go ahead and just clear that out. But you're seeing how this is basically testing the gap. We have this area right here that is going to be, to fill it, we'll have to drop 2 point, and it's really not that much. Sorry, that's not correct. So to fill it, we're going to drop just shy of 3%. So we can kind of, and you can mark this up on your own charts, that this is our gap fill. But in a scenario where if CPI is really bad and we sell off, it's really not going to be just 2.9%. It would 100% be, because the market would probably fall, if CPI is pretty hot, let's say 0.3 month over month, let's say headlines 3.4, let's say core is actually just equal at 4.7, that would be really unfortunate. If that's the case, I would assume you would actually be targeting this gap, the 220 area. I'm sorry, that was the measurement. Let's make a little triangle just so you can remind yourself. And you should make a little triangle too as well. And you can kind of prepare yourself on what action you should be taking at the open, depending on how the CPI came out, how that reaction to the market, reaction to the CPI by the market at 8:30. I know there's really not much we can do, but we'll talk a little bit about hedging, even late hedging. There's some opportunities for us to do something. Okay, so here's the gaps that we're really keeping an eye on. You're saying to yourself, like, this looks pretty low, like 220 sounds pretty low. Well, yeah, it is, but it is just a drop of 8.3%. What does 8.3% look to the upside? Well, if we were to draw 8.3% up from where we're at right now, 8.3% would be $262 a share, or $20 up. And if you're looking at it, it doesn't seem all that bad, right? Because if I was to measure when we gapped up that one day, what looks like Friday, and we sold off into Monday, that was 8.34% over a course of just over a day of trading. That's not that unreasonable to happen off a really bad CPI print. Okay, right? That's a very good possibility that could happen if CPI is really, really hot and the chart itself is very, very bearish. I think if I just I'm going to draw a line of lower highs. We'll draw the channel back. I think the channel is relevant enough. So that's kind of the channel that we're looking at. And you can see this makes it very obvious that you're not making any highs. And if you don't really believe in diagonals, we have horizontals. This is where pricing broke down. This was kind of a peak below the level. It got bought back up, broke back down. Isn't really testing. To the upside. If we were to draw a diagonal to our current price action over the past couple of days of this week, it's lower highs. Everything's just kind of lower highs. And we'll draw back because I think it's still relevant, let's draw back our head and shoulders pattern. So we have head and shoulders playing out. Not that we like that, but it's the reality. We sit on top of the gap. It's never a good look. The market likes to put pricing in a point where things can either bounce or fall through some type of significant area. We talked about this before, there is very little volume profile in the gap. Even going back like a year, there's really not much action to be found in this area. So yeah, it just kind of goes through. So June of last year, there was some action, but nothing in the last year. So yeah, we were hoping for something a little bit bullish, but yeah, from the looks of it, there's really not much we can do about the price falling through. Let's remind ourselves, like, if this was to correct further, like, how much does it go? So from peak to trough, let's just remind ourselves, how about from April of last year until the bottom in May is 46%. How about from all-time high to first lower low-ish thing, 29%, and the low was 44%. So we can assume that a correction could be anywhere from 29% to 44%, 45%. This was 36%, and it went on to be 1,000%, whatever that was, during that course of the day. How about something back in the day when we had this high, we made it low. It was initially 32%, then 39%. There's a lower high, and the lower high to its trough was 30%. So 30% looks like a number, 30% to 45%. This is 35, 36% over here. Okay, so it wouldn't be surprising if something was 35, 45% in the area. And we'll just do a quick measurement, not to scare ourselves, but kind of understand where we need to. If we're going to short, like, where do we short to? I assume it's going to be in the 200 area, but let's see. So 35%, actually, no, it's going to be in the 200 area. So anywhere, here's 30%. If we were to drop 30% overall from the peak right before earnings was released, that would be, 30% would be $209. And that would be actually a level where you can kind of be in this area of some highs before this is basically the consolidation in the spring of this year. What does 35% look like? 35% would be at the bottom of that range right here, from here to here. 45% would be pretty dire, and that would be $162, which would be kind of in this area where it kind of bottomed out in the spring before the run started up. Not an awesome look, but it is not unheard of. Like, just remember, from all-time high to the lowest of the low in February of 22, that was 43% correction. Right. So if CPI is bad, what do? Like, we've been talking about selling calls. We've been talking about getting hedges. But let's say you're coming across my videos for the first time today and you don't know what to do. Let's say you've been pretty optimistic about Tesla. You like the company a lot, but you don't understand why the stock keeps going down. Well, we know why the stock is going down if you just want to be objective about it. If this was a move based off an AI type of sympathy play, well, there's really not much of an AI play going on in a way that's monetizable, in a way that's gonna be groundbreaking for the company. It's not NVIDIA. It's not producing an AI related product and selling it to businesses. It's not doing a service for businesses. It's using AI to train FSD, full self-driving. And one day that will be maybe a wide release out of beta that the government will give license to, that will give permission to be utilized on all roads in the country. But until that happens, you don't know when it's going to happen. And I wouldn't necessarily say that Tesla is the AI company that everyone thinks the AI company should look like. Most people think what an AI company looks like either could be NVIDIA as far as like kind of the actual back end, the compute, or the front end that is consumer facing would be like the ChatGPTs of the world. AI, as far as, real world AI, it's a really great thought. It has a lot of potential, but it's not going to save your stock right now unless full self-driving is able to be released and licensed and given permission to be used countrywide. So what do you do though? Like, let's say you're not short enough. If you want to be short, and this is all assuming like CPI is really bad or CPI is just mediocre tomorrow. A mediocre CPI, meaning an inline CPI report, would be pretty bad for stocks, I think. It would not be supportive of starting a new rally or forming a bottom. We actually have no bottom formation going on in Tesla. Like there's no bottoming process that's happening. It's simply very much when Tesla goes up, you sell the rip. So it goes up a little bit and it's completely sold off. It goes up a little bit even intraday, it's sold off. It goes up again intraday and it's sold off. It goes up again towards the end of the day, thinking people want to get positioned for a CPI. No, it'll completely sell off and make a new low. So none of that is a bottoming process. None of that is bullish right now. And what does a bottoming process look like? I mean, I think it's pretty obvious. Like you get to the point where you make a double bottom, and then you finally get buying somewhere. But we've been so oversold over the past two weeks now, since the 19th of July. Let's just say we've been selling for 3 weeks. Like, these are obvious. See how you hit a low and you get a lot of buying right here in March. You put in low here and you get buying immediately right after, and you just keep on making higher lows, right? Higher lows, and then it tops out. But nothing here looks like that at all. Nothing in our current price action looks like that, because you're seeing when the day ends, like today, it's just a sell into the close, right? It's just a sell into the close. And you're not making higher highs. So for now, we have to assume the stock would react badly unless CPI is amazing, and it needs to be amazing. Otherwise, you fill the gap pretty easily. Now, we don't have to fill gaps. People talk about all the time, like, oh, all gaps are meant to be filled. Yeah, but people seem to say that only when they're talking about gaps below. I don't want to fill this gap. But there's some other gaps even lower at like 146 that we would need to fill. How about 122? Let's not fill those gaps, right? Let's not fill those gaps. But if you are not short enough, TSLQ. I know no one likes it, but it is a utility that you must use whenever you can use it. Now, a lot of people would say, let's say you have like your Tesla investment in Fidelity, and you've been taught all your life by Elon and other people that trade never to use margin. Don't ever use margin. Margin is that will just destroy you. But think about this. If you have margin and it's not touch, you're just buying stock and your broker gives you margin to play with, but you never play with it. This might be the opportunity to actually play with it. So you're sitting there, let's say it's 8:20 a.m. Eastern time tomorrow, and for some reason the futures are up. Actually, we can just look at the futures. Futures are slightly up. Okay, so futures are slightly up. How about the NASDAQ? NASDAQ, a little bit up. We're talking 0.2 up. That's not that dramatic. So let's say though tomorrow it's 8:20 a.m. and Tesla is at $245 a share, which would be $3 more than the close of today, right? So we close at 242.19. Let's say Tesla gets up to 245, and you're saying to yourself, okay, like what do I do with this? I'm like, I can't buy puts, I can't sell calls until the market opens, right? but you have Tesla TSLQ at your disposal. If Tesla is at a slightly higher price than our close today, what I might do is just buy a bunch of TSLQ. And if the CPI print, and we have to keep in mind the CPI print numbers, we talked about, if it's 0.2 to or lower, that might be in line or slightly better than in line. Anything over 0.2 would probably be a very fast and hard sell. And then you buying TSLQ would cushion you against that. And if the market is, if Tesla is higher pre-market, then your TSLQ would be a little bit cheaper anyways, right? Because it is a higher price for the Tesla itself. So I would buy a bunch of that, and I would kind of sit there and kind of watch the report. And when the report comes out, I know offhand, look, if it's 0.1 month over month, if it's 4.5 year over year core, if it's 4.6 year over year core, if it's 1.15 in the month over month headline, these are the kind of numbers I'm trying to look for and understand. That would make my finger would be hovering over the button to sell TSLQ at whatever price I can get for it, reasonable price, and get out of my hedge, right? To get out of it. If the number comes in at 0.25, 0.22, if CPI core year over year is 4.7, 4.8, if the headline is 3.4, year over year 3.5, that's an easy keep for me for my hedge. I would probably just sit on it and then absorb the losses as they come. And that would be my hedge as Tesla sells off into the open. And I might keep it all day if the action is really, really bad. But think about if you have margin, you don't really try to go double in the direction that you want things to go. For instance, if you're long Tesla because you happen to own thousands of shares of Tesla in your 401k or your investment account, and you just like to buy and hold, you buy a couple shares every month or something like that, and you have this margin that you never touch. Don't buy calls with your margin. You're already long Tesla. When do you use that margin? I think when there is a dramatic reaction to something that doesn't necessarily make sense objectively in the pre-market. So for example, let's say something happens or some news event with Tesla and Tesla sells off like 3% in pre-market action. I might, buy a couple of shares of TSLA, which is the leverage long Tesla ETF, and that might be on my margin with the intent to sell it quickly. As if pricing rebounds or if pricing falls too much, I would sell it. But if pricing rebounds a little bit, I'd start scaling out of it over the course of the day. This is not going to be like a long-term hold. But think about margin as the ability to it's giving you the ability to reduce your downside. People talk about all the time, like, don't try to trade Tesla. You're just going to lose your shares if you still cover calls, et cetera, et cetera. But you have all this margin at your disposal and should only use it really when you're trying to prevent the direction you don't like. If you are long Tesla, you don't want it to go down, but you can prevent that loss of value by, using that margin to buy inverse shares of Tesla, which is TSLQ. Just know, like, it would limit your upside unless you sell it. So for example, CPI comes in at like 0.1 month over month or 3.1 year over year. This is a headline. Then I would probably sell my TSLQ almost immediately. Because I think the worst case scenario for Tesla would be maybe like down 1%. So if CPI is really hot, then you can just sit on your TSLQ and it will kind of negate the loss dollar for dollar of your actual long Tesla shares. And it gives you the ability to hedge when the cash hour market is not open yet. It gives you the ability to hedge with something that's rather liquid. TSLQ can be kind of liquid for just because so many people are trading Tesla and are wanting to protect their shares as well. TSLQ can be kind of a lifesaver, right? Use it as a tool. Don't make fun of it and say like, oh, these people are idiots. People who are TSLQ or Tesla Q, they're not rooted in reality. And why was this ETF made, et cetera, et cetera. you have to use it, okay, in a tactical way when you didn't prepare with cover calls or puts into a big event like CPI. Now, how does Tesla react during CPI? I mean, that's a good question, right? Well, Tesla doesn't really react all that well to CPI. Let's see if we can do this. Let me bring up some information here, which would be the releases of the CPI over the course of this year. So we know the one for tomorrow is going to be August 10th. So the last one was July 12th. So if we were to look at July 12th on our chart here, so July 12th, let me get my little brush. I will just do a quick circle. Here's July 12th, right here. So this is the action on July 12th. Now, you saw that you can easily see it was a gap up, right? It was a gap up, and let's see, July 12th. So where did July 12th end? Right here. So it gaps up to $276, but it closes not much higher than the open. It was at $2 up for the day. So it was really an unimpressive day for Tesla. We talked about this when it came out, that sometimes you want a confirmation with PPI, which comes out the next day. And you can see PPI started well in the morning, and it completely sold off to a negative number. And they got bought up slowly through the course of the day and into the earnings report. How about the other one? What's the next one? So we have July 12th. The browser says June 13th was the other CPI release. So June 13th. What would that look like? Here. So here's June 13th. And you see that there's a gap up and it got bought up a little bit. So this reaction was good. So by the time it was Wednesday, it was a move something like 3.6%, which was $9 a share. So that's the reaction there. And so if you have a good CPI number, Tesla could react maybe hopefully well. Just be prepared for what could happen last month, where it gapped up and sold all day long. What's the next one? The next one would be May 10th. So let's look at May 10th real quick so we can understand how May 10th worked out. May 10th was here. And it was kind of like what I worry about, where you have a gap up from the CPI being decent, right? It was up 3%. Up from 3%, it sold off as low as 4.3% down intraday. PPI comes out the next day. No, Friday. So PPI came out and it was flat even through PPI. Friday, it gapped up, sold off. So when there's negative sentiment for Tesla, nothing, even sometimes good economic news, wouldn't allow pricing to go higher sometimes. They're looking for every opportunity to sell their shares, and that quote unquote that they are, swing traders. It's big money, it's funds, it's whoever wants to get out, who is swinging shares from some point in spring. Okay, next date from before May 10th was April 12th. April 12th. Let's look at April 12th. April 12th is here. And it was a gap up to a sell-off from all day long again. So when there's really negative sentiment against Tesla, it really doesn't bode well. It dropped, but just shy of 6% intraday after gapping up a couple of percentage points from CPI. Not a great look. March 14th will be the next date to look at. So March 14th would be here. So here we go again. Okay, so you have a gap up from CPI. It goes 3.7% at the open. During the course of the day, it went up to even 4.6%. From the 4.6% up, it goes on to sell off 4.6% down, right? Now, PPI boosted up the next day a little bit, and that completely sold off again into Friday. So, like I said, it's really hard to beat negative sentiment on Tesla, and I hope that doesn't prove to be the same tomorrow if there's a good CPI print. Just be prepared for it. We'll look at February 14th, and February 14th is going to be another CPI day. From the looks of it, looks not too shabby. So here's the open on, it opened low and got bought up all day long, and it sold off that Friday, which is normal, I guess, because that was kind of the top for the consolidation. That reaction to CPI and PPI was a good move from the open to the high of Thursday. It was 11.6%. Okay, so I think that's a good summary of Tesla's reaction to CPI. Sometimes it's good, but most of the time it's not that great. And don't be too excited. Don't be too exuberant with a good CPI report. Just be really quick and watch that price action throughout the day, because reversals can happen pretty quickly when Tesla's in a bearish context or in a consolidation like we are in now. So let's say CPI does go well. We need to understand the levels of, where can the bullishness stop intraday. Let's say CPI goes really well. What does a move look like to a recent high? That would be a 3.8% move to a recent high. That's a 3.8% move would be $9 a share. That'd be pretty considerable for Tesla. And you can kind of say to yourself, if you get to $250 a share, that might be it for you. Might be it for the stock. And that might be a position that you'd want to, take a little bit off the table. I would maybe sell calls or buy puts and kind of put a stop loss somewhere in range of 25% on them just to hedge the gain for the day. And the great thing about it is, since it's going to be Thursday, puts into Friday could be relatively affordable. It'll be a 1 day to expiration hold. And so that might not be too shabby to get some hedges in just for the day. Let's say, in what crazy world if Tesla is up really, really big because CPI came in at like 0% month over month. Maybe you get a good move, like a 4%, 5% move, and you'd probably want to be ready to see a rejection somewhere around $253.70, somewhere in that area, which would put you at the bottom of the range that we were working on last week and the week before, and where we sold off on Friday of last week. So if there's bullishness, keep an eye out for 250, 253, even like 240. You can even say 247 if there's bullishness. If it's a short and it's going really bad, if it's selling off really hard, just know Tesla could fall through this really quick, guys. It could fall through within 2 days. It could see the gap below this gap. So basically the gap at $220 a share. And you might want to, like, as the market opens, what I will do, if it's selling off because CPI is really obviously bad, I would probably still be obviously maybe holding those TSLQ shares to cushion the blow. Maybe I will then go ahead and look at getting some really out of the money puts into Friday. And if it keeps selling off to a point where in 1 day the move down is something like 7% or negative 6% in that area, which would be $225 a share or something, I might actually close out those puts, buy an overnight call because it would be rather cheap, then kind of rearrange my hedge, because our sold calls at that point will likely be worthless. So if you sold calls and Tesla's at $230, $225 a share tomorrow morning, just know that you look at your calls, they might be worth like $20, okay? Or 20 cents per contract. Maybe that's the time to close those contracts, because there's not much left to get out of them, right? And you need to hedge again. If you see kind of like a bottom forming on Tesla, and you could think about selling a call even just at a very low price. If the bottoming process for the day is going out, if it's being extended by hours, like if it's hours of hovering at 230 or whatever the price is going to be, if it's hovering at that price for a long time, it could be setting up for another short, kind of like what happened with Apple, right? We talked about that with Apple, where Apple had a consolidation over here that it consolidated until 2 p.m. and then sold off immediately at 2 p.m. on the dot. If you're seeing that type of action tomorrow, if you're seeing Tesla gaps down, okay, if Tesla gaps down to, let's say, 235 and then sideways, we'll just draw that in this worst case scenario. You open actually at the bottom of the gap and you're just kind of like that. And it could be like a sell somewhere around there. Yeah, it's very possible. It could look like that. If that's the case, if this is where I'd be selling calls, buying puts, or what have you, into tomorrow, into Friday. If we find a bottom towards the end of the day, that's when I maybe would buy the call. Meaning, if it sells off all day long, maybe I'll take a flyer on a call into Friday, perhaps. What does bullishness look like? If it's going to be bullish and it's going to be a gap up, maybe you get a gap up somewhere around, I would say, like, let's measure it out. I want to say like 2%. Okay, 2% would take you to, they'll make a new high. So 2% would be $246 a share. Now we know that 250 would be tough for Tesla, just because how the options, there's a lot of calls at 250. 250 can be pretty tough. So if there's bullishness, let's say it opens up at like $247, $246, and if you see it stop at 250 in the morning, depending on how long it's topping out, it could be an opportunity for a stab at a short, or it could be an opportunity to sell a call, or depending on how the rest of the market is looking, it can actually be an opportunity to go long. Just kind of look how the rest of the market's looking. Just don't focus too much on Tesla. Maybe the S&P 500 is looking really bullish and it's actually making higher highs. Maybe semiconductors are coming back and you're making higher highs. Things that are really rate sensitive, like real estate. If real estate, XLRE is the ETF, or the REITs like SL Green. If you're seeing those things going up, making higher highs, just know those are really rate sensitive type of equity. That means that the bullishness could be really, really good. And if Tesla's kind of topping out due to negative sentiment, even though the rest of the market's looking pretty bullish, it could be an opportunity to go long. Maybe you want to put a stop on your cover calls if you sell them there at that point, because if it bursts through later on in the day, you don't want to be stuck getting your shares called out. We also talked about calendar spreads, something to think about as well. You don't have to just sit on cover calls. You can put a spread to protect yourself for risks to the upside. But we do know, like I mentioned, that 250 has a lot of calls. I mean, a lot of calls are being bought. People are very, very bullish. Per the usual, it's not unheard of for Tesla to always have every week more calls being purchased than puts. It's just because the people who like Tesla are very optimistic. They really enjoy trading Tesla, and they also like Elon Musk and the company, et cetera, et cetera, et cetera. So there's a lot of optimism there with options plays. But I think it's proven over the past couple of weeks that selling options is much more lucrative than buying options so far. Even puts are getting chopped up. I mean, I do know we've been down a lot. Let's remind ourselves again, from the high before earnings, we're down 19%. That did take 21 days to get 19%, or a little over a percent a day. It's not like the greatest swing put action. Intraday put action is great. Intraday you can get really good put plays depending on the day of the week, because I like them better closer to Friday. But yeah, so those are the type of scenarios that I'm looking at. A gap down, hopefully, would be a gap down to flat. What's a gap down look like? An immediate sell in the sell all day. So if it does gap down somewhere like 238, and the sell all day would just be it would just look like a steep diagonal down, and you'll try to find bases maybe above another gap. But yeah, just be prepared for that. Like I mentioned again, TSLQ, if you see bullishness in Tesla, it's maybe an opportunity to grab a couple of shares of that to hedge your shares. Just note that TSLQ is not leveraged. It is a 1-for-1, dollar-for-dollar inverse of Tesla shares. So it's not like buying SQQ It's really just to hedge your shares. So, is there anything else we need to talk about today? I would say the only thing we need to talk about today is don't be surprised how negative Tesla could be if the reaction to CPI is really, really bad. Don't be surprised if it's really, really, really bad, guys. If it's good, don't be surprised if the good is not all that great. Okay? I think that's all we can say. Also, we can say good luck to us. I hope we survive CPI, right? I hope we survive PPI. But it's looking rather bleak, and there is no bottom being formed on Tesla. So thanks so much for listening, guys. I'm really sorry that it's just not looking so great for these past couple weeks and really for months of our consolidation. But we've talked about this for a very long time. Tesla consolidates. It creates these patterns that become just so very obvious. And there's a lot working against the stock. There's really a lot of people against the company. And so just know that you don't really have the support of institutions or the media or anything like that. Hang in there, guys. But thanks so much for listening. Bye.